Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on in the markets today? Well, not much yet. We're pretty flat across the board. We do have the Fed minutes coming out later this afternoon, which, well, it should move the market one direction or the other. Well, we had that big down day yesterday, right? Down about 700 points on the Dow. Brought us down to the 4,000 level on the S&P. Now, the 4,000 level, there is a lot of support here. We were having a tug of war between the 4,200 and the 4,000. Now, the bears have pulled it down to the 4,000 level, but that's where the support is. Now, we could get a bounce higher from here before we move down. Now, we're down about 5% off of the highs. The highs were around 4,200. We're down about around 4,000. So down about 5% so far. I still believe that we have a 20% drop ahead of us. I think we'll go from 4,000 down to 3,400, but we could bounce off this level here. There is a lot of support right here. The HYG, which is the junk bonds, sitting right on the 200-day moving average. The SPY sitting right above the 50-day moving average. We have a lot of support right here, but I do think we're still going to get a downward drift down to the 3,400 level, and that's about 20% lower from here. That's my take on the stock market. Yours may be completely different. All right. So let's move over to the real estate market. Now, I was reading this interesting article. Shark Tank, Barbara Cochran, I don't know how do you pronounce her last name. But anyway, she came out with the article and says the worst in the housing market is behind us. Well, now, a year ago, she was saying that we had the best housing market ever. Now, we're down about 10% from that level where she announced that it was the best housing market ever. We're down 10%. But now she's saying the worst is behind us, so feel free to jump back into the marketplace. Well, she says that the market is really going to take off once the Fed pivots and interest rates come down, mortgage rates come down. Then the market's going to skyrocket, the real estate market. Now, she has a lot of skin in the game, and you got to take into account who is making that statement. Her business is investing in real estate properties. She's a real estate investor. She has a lot of properties and she doesn't want these to go down, so she's talking them higher. Now, there's a lot of people that think the housing market's going to double from here. If you read the comments in my section, sometimes you'll hear from one or two of these people. But the interesting thing is they always have a lot of skin in the game. They're levered up in real estate. They own maybe multiple houses, but they own them on leverage. In other words, all of their money's invested. They're fully invested in the real estate market, and they don't want them to go down. So they get very upset when I say they're going down. And they think that somehow by the fact that I'm saying they're going down, that I'm the guy responsible for the housing market to drop. Look I love real estate. I'm a real estate guy. Real estate has been my life. I just think that now is not the best time to be a real estate investor. Now, Barbara Cochran, she'll tell you that it's a great time to be a real estate investor because she wants her properties to go up. But I'll tell you right now is not the time to be out there investing. It's not the time to be a buyer of real estate. You wait, the opportunities are coming. I love real estate. 2 thumbs up to real estate. It's a great investment when it's the right time to buy. Right now, it's not the right time to buy. We had the pandemic up 20% a year, 2 years up 40%. And now what do we got? We got mortgage rates that have doubled. They were at 3%. Now they're at 7%. What does that all combine to make? It makes it a terrible time of year for buy real estate, a terrible time to be buying real estate. Now, I think that we're going to get a massive collapse coming in the real estate market. Now, can I tell you why? Well, it's the investor like Barbara Cochran. Okay, she's an investor, right? She's got a lot of properties out there. Well, investors have stopped buying real estate. Now, investors, the purchases are down 50% from where they were a year ago. They've stopped buying. Now, why have they stopped buying? Well, let's think about this. A lot of them are running out of money. Who am I referring to? Think people, okay, Zillow was a big investor in real estate. They ran out of money. They went broke. They lost $1 billion. Redfin, another big investor in the real estate market. They ran out of money. They had to get rid of all their houses, right? So Open Door, another real estate investor, but they're going broke. Look at their stock. It's down over 90%. They're going broke. They're out of money. So these investors now, they've stopped buying, but that's not the whole story. No. That's not where it stops, right? These investors need to get some of their money back. Their houses are now dropping. They've fallen by 10%, and they're going to fall by another 10, 20, 30, 40% more. And they want to get out before they lose all their money. So these investors are now running for the exits. They're starting to dump their houses onto the marketplace. Now, in some areas, investors were responsible for 70%. 70% of purchases were made by investors during the pandemic in certain cities, in certain areas. And now these areas that exploded higher, well, no doubt about that, their prices went up 40, 50, 60, some went up 100%. But now these areas are starting to come back down because the investors, they're running away from the market. They're not running into the market to be buying these. The investor's waving the white flag. He's throwing in the towel. Now, why is the investor throwing in the towel? Well, let's think about this. Okay. All right. So we got this economy, right? And we're a consumer-based economy. Now, they'll tell you, if you listen to the government, they'll tell you, oh, consumers really strong, their spending's up. Well, their spending is not really up. Look at, in the last year, they say the spending went up by 3%. Well, look at, inflation went up by 8%. So they're not spending, they're spending more. That is true. They're spending more money, but they're buying less stuff. You see, they're spending more to get less stuff because the consumer went up by 3%, but inflation went up by 8%. So this consumer-based economy is circling the drain. It's not doing so well. Listen to the government. They'll tell you it's doing great, but the consumer, he's maxed out his credit cards, right? And that's what the consumer's been buying with. They've been buying with debt, and now they can't get any more debt because they're maxed out. Our government, they've maxed out all they can spend. We're up against the debt ceiling. So this debt-driven economy is now getting in trouble. It's now circling the drain. The consumer, they're out of money. They don't have money to pay rent. So what's happening to rents? Well, rents are actually starting to go down because, well, consumers, they're moving out of apartments. They're getting roommates. They're doubling up. They're living on their friend's couch. I don't know where they're going, moving back home with their parents, but they're refusing to pay the rents right now. So the rental market is actually starting to go down. So we have the investor over here, right? So he's bought at these high prices. He's an investor. He's got it rented out, but now he is rented backed out. So now he's got a vacant property. So rent prices that he's collecting are starting to go down, right? What's going up? Well, we got inflation, right? So his expenses are what's going up. The expenses are going up, the money income that he's bringing in is going down, and the price of the properties are starting to drop. So the investor, they want out. They just going, this is bad. This is real bad. I don't want to be in this market. I want to get out. So right now we're in phase one where the investor, they're not buying anymore. Purchases by investors, they're off by 50%. 50%. In some areas, they're off by 70%. Right? Okay, but now the investor's not buying, but it's going to get worse. The investor's starting to sell. He's starting to sell into a market that is already going down. You see, people are not paying their rent right now. There's 8 million people that aren't paying their rent. The tenant can't afford to pay rent because the tenant's running out of money. He can't find a way. The consumer needs more credit, right? They need more credit. Okay, now if they have a house, what you're seeing are these these HELOCs, home equity line of credit. If they have a mortgage and they have a house and they have equity, a lot of people already don't have equity. A lot of people are already underwater with negative equity, so they can't do this. They can't go get that HELOC loan. But a lot of people that still have the equity, they're looking for ways to pay their mortgage, to get money to buy groceries, to put gas in the car, so they're go get what's called the HELOC loan, a home equity line of credit. Now, these are not cheap. You see, regular loans about 7% with 800 credit score. But the HELOC loans, they're starting about 9% with a good credit score. You got a bad credit score, you're going to be over 10% on these HELOC loans, right? But this is the new way of refinancing. In the old days, you could just go refi, right? But now you can't go refi, because when you go refi, you're going from a 3% mortgage into a 7% mortgage, and then your payment's going to be just jumping. So you can't do that. So you keep the 3% mortgage and you go get the home equity line of credit so that you can pay your bills, so that you can pay the mortgage and you can continue to delay the process of the prices coming down. Look, if you cannot afford your home without a HELOC, you might want to consider getting out now while you can still get out close to the price that Billy Bob got out at. Now, Billy Bob got out up here and we're 10% below Billy Bob right now. But in my opinion, we're going to be coming down 30, 40, 50% below where Billy Bob got out. Now, I get it. If you got invested in real estate and all your net worth is tied up in real estate, you don't want to hear that. You want to hear Barbara Cochran's side. You want to hear her side of the story where, hey, the worst is behind us. The housing market's getting ready to take off. As soon as that Fed pivots, we're going to double. The price is going to double. Get in before the Fed pivots. Well, historically, what happens is after the Fed pivots is where the housing market really drops. Look at it. Go back and look at the last financial crisis. Fed pivoted in 2008, right? 2008. Where'd the houses bottom out? 2012. 4 years after the Fed pivot, they finally hit the bottom. They finally hit that bottom. It's going to take time. You don't want to see that Fed pivot, because when the Fed pivots, it's going to be too late, because the Fed's pivoting for a reason. They're pivoting because something's broken, and what's broken is probably going to be the housing market. Now look at, I'm a housing market guy. I love real estate, but now is not the time to be buying. Right now is not a good time. Prices are still high. Mortgage rates are double what they were just a year ago. And of course, if you talk to your realtor, they'll tell you just buy now, you can refi later. Look at, there's no guarantee these mortgage rates are going down. My opinion is they're going up. They're going to hit 10%. And that's if you have a good credit score, because the Fed's going to keep raising until they surrender to this inflation fight that they pretend to be fighting. They don't want to fight it. They want to inflate away the debt. Inflation's here to stay. It's not going away. Yeah, it's going to go down a little, it's going to go up a little, going to go down, but it's here to stay. It's not going away. I'm telling you, they're going to continue to raise rates to at least 5.5%, 6%, which is going to push those mortgages up to 8% for maybe good credit, maybe 9% if you have average credit, 10% if you have bad credit. The mortgage rates are going higher. So this buy now, refinance later stuff, no, don't buy into it. And don't buy into Barbara Cochran telling you that after the Fed pivots, mortgage rates are going to come down and everything's going to be great. No, you can go talk to your local realtor and he'll tell you it's a great time to buy, but don't believe him. Don't buy into it. Look, you can leave me the hate comments if you're invested in real estate. If you think they're going to double from here, I get it. You're fully invested. Your money's in there and you want it to go. I would like it to double from here too. It's just not realistic. It's not going to happen. It's going to revert back to the mean. The mean is about 50%, about 40% off from where we are now. We're down about 10% in most areas. And so we were 50% above the mean. We're going to come back to that mean about half off. This is my take. If you like this stuff, I'm Tall Mike. Give me the thumbs up. Why not? Fed minutes coming out later on today. That should move the market one direction or the other. A lot of support at the 4,000. Might bounce higher before we go lower. I'm Tall Mike. Get out there. Have a great Wednesday, everybody. Bye-bye now.